September 12th, 2024. The prior day was a large bull trend day. And when you have the prior day as a large bull trend day, there's a 75% chance of 2 hours of sideways to down trading. This sideways trading ended up being a little bit more sideways to up, but either way, you got, the 75% in here. 75% chance 2 hours sideways to up, or sorry, sideways to down trading. Additionally, there's only 25% chance of a big follow through bull trend day. You could argue this was a trending trading range day. We had first trading range and then the breakout and then the second trading range, which did overlap with the first trading range. So you could argue that it's a trending trading range day. However, I think that this was really, this was a lot bigger than you're usually going to get on a trending trading range day. Another thing to keep in mind is when the daily range is this small, 30, 38 points in, the middle of the day, you're probably going to try and double the daily range. So we didn't quite double it today. That was something to keep in mind. Coming into the day, bar one, we have a bear bar with a tail on the top and the bottom. So probably sellers above. Something to keep in mind is we haven't touched the moving average since bar 30 yesterday. So here we are a little over 50 bars later, and we still haven't touched the moving average. So the first time that we touch the moving average, bulls are going to buy pretty aggressively. You can see they did end up buying, but first time we touch the moving average, you have to be expecting traders to buy. Two, an outside down bar, but a doji as a close. So is it worth doing anything here? No, not really. I'm not really looking to buy until we get to the moving average, and I'm not really looking to sell unless we go, get a quick rally and then some sort of bull trap on the open. Bar three, bear bar, but tail on the top, tail on the bottom. We have three straight doji bars to start the day. So whenever you have something like that, the odds of a trading range day increase a lot. So it's a very possible trading range day. And you could categorize today, I suppose, as a trading range day. It was probably a bit more, of a bull trend, I suppose, but you could definitely call it the type of trading range day, trending trading range. I thought made sense to call it that. Bar four is a surprise bar. I think it's the bulls giving up on their bull trend and admitting that we're probably in a trading range. But the reality is all that this is doing is getting to the moving average. No one wants to sell the close of four. This is a buy to close bar, if anything. We haven't touched the moving average in 50 bars. So bulls are going to buy below bar four. The reality is the bull who buys below bar four with the stop and measured move down. So they're risking 20 points and trying to make 25. I think they have better than a 60 or at least a 60% chance of being successful with that trade. So it's a good strategy. And four is probably not going to get a lot of follow through. And if it does, you can just get out. So I think that four makes more sense to buy at the close of the bar than sell the close of the bar. Bar five, a bull bar, a small tail on the top, which isn't a huge problem, but I think the biggest problem is the math. If you buy, where's your stop? Well, putting it below doesn't make a lot of sense because we might get a second leg down from bar four. But what's your reward if you do that? Well, it's a little better than 1-to-1, but I'm not so sure that you have a 60% chance buying above bar five of us getting to a new high of the day before we pull back below bar five. So if I'm buying above bar five, I'd probably rather use a wide stop. And it's difficult to use a wide stop in this situation. So because the math, again, not all that great. However, we're probably going to get back to the bars 1 and 2 low because sorry, let me rephrase. We're probably going to get back to the bars 1, 2, and 3 low because there were bulls who bought below on limit orders who were willing to scale in, who were probably going to make money. And 4 was not a convincing bear reversal. 6, it's a high one for the bulls. You can see bulls were not that eager to buy the close and buy above bar 5 because the math really wasn't all that excellent. So there's probably more buyers below 6 than there are sellers, and probably more sellers above 6 initially, at least, than there are buyers. But I don't want to sell above anything right now, considering where we are, the context. We're going to bounce. The bulls have an edge right now, but it's only lasts up until we get up here. And you can see the bulls, instead of buying above the high one, they bought below the high one for a better risk reward. 8, an inside bar. So the bulls, they want a breakout, and this is the pullback, and maybe a high 2 buy above 8, but there's a big tail on the top. You probably could buy it and just take a chance to get back to this high, but I don't think the equation's really all that great, and I don't really want to buy above this bar. And then you obviously get a huge surprise bar on bar 9. It's surprising, but it's not all that surprising because usually, you're going to get a vacuum test of the high. If the market's in a controlled trend, it'll look a lot more like this, where you're getting similar size bars, a spike in channel. It's a little bit climactic, but not overly climactic. However, everyone knows the magnet is right here. So we could be going for any number of magnets up here, measured moves, whatever, and it's consistent, strong buying. Versus here, everyone knows the magnets here, and the question is, everyone who's, when are we going to go there? So when we start to rally and start to race up towards this high, traders will buy at the market, just basically taking a chance that this is going to be it, and then they'll scalp out at the high. And traders who are algorithms will do that as well, probably more so than traders because it moves pretty quickly. So 9, a bull surprise bar, but I think it's good for the bulls, but I think this is probably the end of the line for most of this rally. The buy climax low, the bar 9 low, will be support if we do sell off. 10, we have a bull bar, so consecutive bull bars, 9 and 10, but it's not really that great to buy above 10. This is a lack of momentum. If you bought above 9, you wanted to see another bar that looked like 9 and break far above the high and into a new bull trend day. But remember, probably only like a 25% chance of a strong bull trend day happening today. So it's really not all that great to buy above 10. 11, an inside bar. I think this is, so obviously it's a pullback and it's a high 1 for the bulls, but I don't know. This is getting into an area where it's pretty sketchy to be long unless you have a really wide stop and are willing to scale in. But 9, 10 might be some sort of second leg trap. 11 is disappointing. And 12 is an inside bar. It's still a high 1 for the bulls. It's an II, so inside pattern, 11, 12. It's a final flag. It's 3 pushes up, 1, pullback, 2, pullback, 3. So we have 3 legs up, and you tell me, does this look like a bull trend or does it look like a leg in a trading range? Looks like a leg in a trading range. So I think we're going to end up being a bit more sideways here rather than straight up. 14, obviously, I think is due to the wedge. It's not like you're going to sell below 13. However, the bears see the 3 pushes up as well as the bulls. So we might have to get a couple of legs sideways to down here. This being the first leg down, and 18 ended up becoming a second leg trap as well as a wedge. So 14, a big bear bar, but a large tail on the bottom. Assume we went to around a 50% pullback. So in that area, the bulls ended up buying around the bar 14, 50% correction. 15 is an inside bar. It's a high 1 for the bulls, but I don't really want to buy above 15. We need 2 legs sideways down. So the bulls want a breakout above the wedge and a measured move. We did end up getting that, basically. I suppose if you use this as the wedge, we did get that. But I think that the wedge became more like this, rather than, 1, 2, 3. So we ended up creating a different wedge. But regardless, 15, probably not great to buy. We're probably going at least a little bit lower. 14 is a surprise, and it's going to get a second leg down. 16, an inside bar, so we have an II, 15, 16. But I don't want to buy above 16. It looks like the bears are about to try and get their second leg down. Some bulls would argue the tail on 16 is the second leg down for the bears, and we're going to get a rally and a breakout above the wedge. However, I think, not really all that great. 17, an inside bar, so we have an III pattern, 15, 16, 17, 3 consecutive inside bars. Probably sellers not too far above, probably buyers not too far below. And then large outside down bar on 18. But, the big problem with 18, well, big bar, big risk, and you're selling the middle of the trading range, a little bit lower than the middle, and it does not close below the bar 14 low. So possible wedge, 1, 2, 3 somewhere over here when you can see the close of 18. Possible second leg trap, 1, pullback 2, and 18 not closing below the low of 14 is a really big issue for the bears. So it might be better to wait for follow through. We might go down a little bit, but the downside for the day might be limited because if you think about a higher time frame chart, pull up a 30-minute chart. We're in this area. Whoops. We're in this area. So after all of these bull bars, do you think that we're immediately going to sell all the way off? No, probably not. It doesn't mean we can't get some sort of move down, but it might be limited to 20 or 30 points or something. I'm not sure we're going to get a collapse below bar 18. Bar 19, disappointment for the bears and a huge bull bar closing near its high. The problem with 19 is kind of the same thing, big bar, big risk, but it's a possible wedge, bar 10 and 14 and 19. So possible wedge for the bulls. You can buy above 19 for a swing, I think, taking a chance we get a breakout above the 18 bar range and possibly get a measured move. 20, another bull bar. So consecutive bull bars, 19, 20, or consecutive bull closes. But look at 20. Is it really what you wanted out of the bar? Probably not. I think the tail on the top is rather disappointing. So really not all that great. You want a good follow through bar on 21. The bulls are hoping it's going to be a big enough follow through bar that we get a breakout above what they thought was the wedge 1, 2, 3, or 1, 2, 3. It ended up being the third leg of the wedge, so it ended up causing the wedge on bar 21. You can see when we broke up to the new high, the upside, the bulls saw the disappointing tail on 21, saw the context of the area we were at, and they immediately sold out of their longs, and that's what caused bar 22. So 22, a bear bar, but a big tail on the bottom, and we did trade below 21. You know that the bulls who bought the close of 21 and are willing to scale in lower, they probably have a stop below the low of the day, and they'll buy more if we test the bar 19 low, the buy climax low. So you have to keep in mind the 19 low is going to be pretty major support if we get back down to that area. But 21, a big bear bar, but a tail on the bottom. 22, consecutive bear bars, but these are not really all that great. Are these 2 bars going to undo these 3 bars? Probably not. So it's really not as good as it could be to be selling the close of bar 23. Bar 24, a bear bar, but a big tail on the bottom. So we have big tails on 22, 23, 24. That's possibly some sort of wedge on a lower time frame. And look, we had 3 bars up, 7 or 8, 9, 10, and then a bear bar. We had 3 bars up, 20, 19, 20, 21, and then a bear bar. We have 3 bars down, 22, 23, 24. What do you think is going to happen? Probably a bull bar, probably not another bear bar. So disappointment, 25. A big, an inside bar. It's a high 1 for the bulls, but there's going to be sellers above 25. It's really not a very good buy. So traders, they sell above 25, willing to scale in higher, betting that 26 is basically not going to close on its high. And they have the protection of 22, 23, 24, expecting a lower high. Granted, you are expecting a higher low from 19, 20, and 21, but the bears are going to get a second leg down from the 3 bear bars they just got. So sellers above 25 during 26. 26, a low 1 short for the bears, but I'm not really willing to sell. Let me grab a sip of water. To me, you have a bull bar here, and it's not really a very good low 1. You're selling in the middle of a trading range. And if you're going to sell a low 1 in the middle of a trading range, you need to stop above the high of the day. So it's probably better just to leave it alone. 27, a bear bar, but a big tail on the top and the bottom of 27. So we might be forming some sort of wedge, 21, 24, maybe 28, something like that. We're probably going to try and get some sort of double bottom with the bar 19 low. 28, a bear bar, but a tail on the bottom, probably sellers not too far above. And you can see disappointment 29, we did get sellers above. So bar 30, buyers below 29. 30 is the third push down, the first push down to 24, second push 27, 28, and the third leg down is bar 30. So we have 3 pushes down to the bottom of the trading range here. I think we're creating an upper trading range, right? Because we tried to create a full trading range with the bar 5 low, but that just ended up being a vacuum test. And with how strong bar 19 is, I think that's going to hold as a possible low. So traders are willing to buy around the bar 19 low, betting that we're going to get a reversal back up. 31, a bull bar closing near its high. Do you want to buy above 31? I probably wouldn't personally. I think after the bear bars, you probably don't want to buy after, it is a wedge, so we should get 2 legs sideways up, but I would just rather wait. We're we're around bar 30, and there's going to be some sort of midday reversal attempt around bar 40. The question is, does the midday reversal attempt right here, the lower high potential major trend reversal, does it succeed or does it fail and break up to the upside? And something to notice on the close of bar 31 is that the vast majority of the bars today have held above the moving average. We've dipped below, and we've dipped below, but usually we're holding above the moving average, and the bulls have been able to keep the market relatively far above the moving average. So the more closes that we have that are above the moving average, the more likely it is that the breakout's going to be to the upside. So you should have a slight upside bias here. 32, a doji bar, a bear bar, but just basically a doji bar. Bulls more willing to buy a pullback of bar 31 than they are to buy the high of bar 31. 33, it's an inside bar. It's a high 1 for the bulls. So 31 bull bar closing near its high, disappointment 32, and a high 1 bull bar closing near its high 33. So you buy above 33. Are we always in long? I don't know. I think maybe we probably went always in short on 24, but it was never all that great. You can make an argument that we stayed always in long pretty much the whole day. But it was never really all that great to be short in these areas. So you could buy above 33, high 1, maybe stop below 30, double bottom 30, 19, but I'm not really sure that it's a great idea. I am personally waiting for the bears to try and reverse the market and us to try and get a strong breakout or some sort of breakout signal or something along those lines. 34, another bull bar, but these bars lack momentum. 33 and 34 are a lot smaller than 31. So for me, I'm just going to wait until I get a breakout with follow through. 35, bear bar, so probably buyers not too far below, probably sellers not too far above. Bad low one short for the bears. And then 36, again, buyers below, not really that ideal. 37, buyers below 36, but they're going to end up scalping out during 37. 37 is possibly three pushes up. So 31, 33, 34, and 36, 37 is three legs up. So I'm not that sure that we're going to go that much higher without trying to reverse. 38 is an outside down bar. The bar 37 low and the bar 38 low have the exact same low, but it still qualifies as an outside bar, regardless of the fact that they have the same low. 39 is an outside up bar, so we have an OO pattern, 38, 39. When you have an OO pattern, there's a 60% chance that you get some sort of measured move. So you got to figure 60% chance we might end up going up here. You know the bar 21 close is going to be a magnet. So when we reach that price, the question is, are we going to reach that price and then reverse, or are we going to reach that price and bulls will buy more? If they do buy more, we need a better looking breakout than we got here, because the wedge, 1, 2, 3, now we're going to try and get a breakout above the wedge. This was the bears' attempt to reverse the market, bar 38. Midday reversals occur between bar 38 and bar 42. So this was the bears' attempt to reverse the market. And it seems like they failed, 39, and then consecutive bull bars, 40. You can buy above 40, closing near its high, taking a chance that we get a swing up and a possible measured move because of the OO pattern. So everyone thinks, I think everyone at this point is pretty clear on the fact that we're going to try and get to the bar 21 high. But the question becomes, are we going to get to the bar 21 high and get a bunch of follow through, or are we going to get to the bar 21 high in reverse? And then you get bar 41. Bar 41, bull bar closing basically on its high. It's really good for the bulls. It closes at the bar 21 high. So it's more bullish than it would have been had it closed below the bar 21 high, but it's not as bullish as it could be had it closed above the bar 21 high. Either way, 41 is a really good looking bull bar. Yes, 39, 40, and 41 are pretty climactic. So if you look at it real time, 41 looks really climactic. However, you have to keep the context in mind that while it's been a trading range and it might be a buy climax at the top of the trading range, the daily range has been small and we're probably going to break out. So you can buy above 41 or hold long above 41, taking a chance we get a swing up. 42, consecutive bull bars, 41, 42. We're probably going at least a little bit higher. There is a tail on the top of 42 and the bottom of 42, so we might pull back soon, but still going to be reasonable to be long. Still buy the close, buy the market, buy for any reason. 43, a doji bar. So it's a pullback to me when I see a doji bar like 43. It's an inside bar, a high one. So high ones might lead to deeper pullbacks and then trend resumption. However, in the spike phase of a bull trend, the high one will usually lead, or is more likely to be reasonable to take and use a tighter stop. So because in the spike phase of a bull trend, high ones are more reliable. So do you buy above 43? Well, it's buy the market, buy the close. You can buy for any reason. So bulls holding long. 44, another bull bar. I look at 41 43 as the start of the bull channel. So when I got 43, I moved my stop to below the 42 low. And once we got a close above this high, so basically bar 45, as bar 46 was forming, I pulled my stop to below bar 43. My logic was that this is the bottom of the bull channel. So we had a spike, and then 43 is a pullback. Now we're forming a bull channel. And if this is a bull channel, we should not go below the bar 43 low. 46, a bull bar, but a big tail on the top. So we have 1, 2, 3, 4, 5, 6, 7, 8 straight bull bars. So a lot of bullishness, a lot of straight bull bars. Obviously, the last 4 bull bars, 43 through 46, are not as strong as the first 4 bull bars were, 39 through 42. So that's another sign this may be converting into a bull channel. Bull surprise, 47. It's climactic for sure, but give me a reason to sell. It's kind of my logic towards that. So there's obviously going to be buyers below 46, and 47 is climactic. If you're still long, you can buy above 47, stop below 47 since it's a higher low. So bulls, they'll pull their stop to below 47, and there's no reason to really exit. It's still climactic, but what argument can you think of for the bears to short up in this area? It's probably not a very good one. We're probably still going higher. Disappointment on 48, a pullback. 47 is a big bar with big risk, and we're relatively deep in this bull trend. So bulls might try to buy more of a 50% pullback, maybe of the whole move to the 47 high. can be like a little bit tricky with that sometimes. We got within one tick of that 50% pullback, but did not quite get there on bar 48. An inside bar, a high one, bar 49, reasonable to buy. You can buy the close, taking a chance that we're going to continue up for at least one more leg. And 47 is enough of a surprise for at least one more leg. But again, still 9 of the past 10 bars or 10 of the past 11 bars have been bull closes. However, 48 being a bear close does, make it likely that after maybe one more leg up, we're going to start to go sideways. 50, a bull bar closing near its high. 48, 49 is a micro double bottom and a higher low. So on a lower time frame, we rallied on 47. We pulled back on 48. We bounced on 48. We pulled back on 49. And then we rallied on 49 up through 50. So rally, pull back, rally, pull back, rally. Spike, two-legged correction, and then bull channel. So you have to keep in mind at this point on the close of 50, you can pull your stop to below bar 49. 51, a doji bar. Usually doji bars this deep in the bull trend means that the bull trend is coming to an end relatively soon. So traders are going to start to look for buy climaxes to exit their longs. 52 is one of those possible buy climaxes. You could just exit your long on the close of 52 if you want to, or on the close of 53, that's fine as well. Or you can just wait for 55 and get out below that. Or if you were really picky, you could wait for 64 and get out below that. Those are all reasonable exits. So 53 consecutive bull bars, 52, 53, good for the bulls. Probably going at least a little bit higher, going to get a second leg up, but this is getting really, really overdone. 54, a doji bar. I think the big sell-off, the tail on 54 and the amount of overlap it has with 53 is going to make the market go a little bit more sideways here. 55, an inside bar, doji bar. Probably buyers somewhere below because of how strong this has been, but I think bulls are going to be okay with exiting below 55. When you're this deep in a trend, a lot of traders have a lot of profit. So a lot of traders just look for the first reason to exit, and that at this point would be below bar 55. And that's what's causing the bar 56 to be, as large as it was. Probably buyers, though. Traders buying the close more so than selling it. An inside bar 57, probably buyers not too far below, sellers not too far above. We have an II pattern 57, 58, possible final flag. And then 59, a bull bar, but terrible context, right? We have basically 4 doji bars, 54, 55, 57, 58, more or less in the past, 6 bars. So this is just going to be sideways. And then disappointment 60, not the follow through you wanted if you bought above 59. So a lot of those traders might exit, causing the sell off on 61, but bulls are willing to buy below 60 after consecutive bull bars. So you were at the top of the trading range. We have dojis 54, 55, 57, 58, 60, 61. So many doji bars here. I know that the argument that 57 and especially 58 aren't dojis, but really what they are is they're really small sideways bars. So to me, I look at them as dojis. They're gonna function the same way as dojis and create magnets. So 62, if you were long for any reason and 62 does not break out of the high, I think that's disappointing. You wanted a strong bull bar closing near its high. Instead, you have a wedge, 57, 60, 62. So disappointment 63, bulls might exit below 63, possible wedge, or exit below 64, consecutive bear bars. So you could do that as well. You can see 65 sold off. See, we had this open gap right here. And 65 sold all the way off to the bar 21 high and closed the gap. And that's why I think you could argue this is a trending trading range day. It's not a textbook one for sure, but it's a form of a trending trading range day. Usually a trending trading range day, the breakout will be 4 or 5 bars, and then it'll go sideways again. But this was a possible. This was a different version of that. 66, an inside bar. To me, I see 65. I'm done for the day. That's a huge bar, and we're just going to end up being sideways most likely for the rest of the day. I don't think anything more significant. There's no more swings left today. So no one is expecting a swing after you see 65 and then 66 reversing it. It's a big reversal bar, basically a giant doji bar. If you think about it, 65, 66, put them together. It's just a giant doji bar. So let's look at like a 10-minute chart. I don't know if those two will be together on the 10-minute chart. Oh, perfect. Okay, yeah, 65, just a giant doji bar. So no one really wants to do anything with that. So in my mind, I see those two, and I'm probably just all set for the day. An inside pattern, 66, 67, and then a breakout attempt above. But again, more dojis, expecting us to go sideways. I would not do anything after this. For stop orders on the day, it was a little tricky early in the day. 19, but kind of difficult. You probably have to exit below 22 if you're still long. I would not take 31 personally. 40, 41, you could buy above 39 too since it's no O. 42, buy the close all the way up through probably technically bar 53, and you can just exit below 55. Then, I'm not personally going to sell 64. That's, you'd be taking a chance that this becomes a trading range day and we close gaps. But for me, I think that the best trades of the day were mostly just buys, and there was only a couple of them. So kind of a weird stop order day. The easiest limit order trade on the day was probably buying below 46. There's usually like one or two really easy limit order trades on the day, it seems. But you can get trapped if you don't do it correctly and you buy below things like 13, third leg up. You don't want to do that because this can happen. The daily chart. So it's a good bar for the bulls. I'm going to turn on extended hours. It's a good bar for the bulls. We have 4 straight bull bars. It's possible that we got leg 1, pullback, leg 2. So that might be a thing. We might have to vacuum test the bar 830 close and then form a trading range. We did get 4 bear bars down. Now we have 4 bull bars up. So you do have to wonder if we're going to have a bull close tomorrow. It might be a little more sideways. This isn't bad follow through by any stretch of the imagination, but it's certainly not perfect follow through. Bulls probably wanted a bigger bar breaking out of this high. This is instead, this bar just buys the bulls time. So the bulls really want another strong bull day tomorrow to break out above the high, but I think we're in a trading range and they're entering back into the area of the trading range. So I would pay a lot of attention tomorrow to 56, 56 or 56, 56.5, this area, the sell climax high, and this bull bar closing reasonably strong. I think there's going to be sellers if we get up in this area. The weekly chart, a bull bar, but could be a second leg trap. You don't really know yet, so probably better just to wait. But even if this bar closes on its high, it's big bar, big risk tomorrow. So weekly magnets will be important tomorrow because it's Friday. The bears are going to try and put as large of a tail on this body as they possibly can, and the bulls want the bull bar closing on its high. The monthly chart, I suppose we're not really all that close to the end of the month, but I do think we're going to trigger above this bar. So we're only 60 points away. So bulls ended up buying a pullback. We're probably going to trigger and go above here. We might have to get to 6,000, but none of this is all that great for the bulls at this point. It's not as strong as this stuff. So still a bull trend. Might have to go to 6,000 first, but I think if we get 6,000, we're going to form a trading range between 5,000 and 6,000. I do not think this is enough of a test of 5,000 for me to, just look at this chart. Look at how important. Look at what we did around 4,000. We oscillated around it for months. Hit 3,000. We basically stayed around 3,000 from 2017 to the middle of 2019. We went up a little, yep, down a little, yep, and then 4,000. We basically stayed around it. We went through it. We might be doing something like this where we went through it and it took like a year to come back to it, but we do end up coming back to it, and then we oscillated around it for basically 2 years. So, we came back and tested this briefly, but look at the big round numbers and how much time we spend around the big round numbers, 2,000 even. Look at all these months we spent around it. So do I think that 5,000 is magically going to be the first number where we don't spend a lot of time around it? No. So I think we're coming back to 5. I don't know when, but I do think we're coming back to 5,000. Maybe we touch 6,000 first. It would be a 20% correction. So that would make sense to touch 6,000 and get a 20% correction down to 5,000. But I don't know. That would be probably many months from now. Anyways,